Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Good afternoon. My name is Paul Vanas, and welcome to Real Estate Pro Talk. This show is a real estate-oriented program which will cover a variety of topics every Friday afternoon from 3 to 4 p.m. here on WOON Radio. Some of the topics we'll be talking about during our time together will be how to buy and sell a home, how to choose a real estate agent, how to choose a mortgage broker, real estate insurance, flipping real estate, staging a home, and a whole lot more. I've been in the real estate business coming up on 40 years now, of which I own a real estate brokerage company, a real estate school, and a land development company. All of the knowledge that we're going to try to impart on you today is based on the continuing education classes that I teach licensed real estate brokers and agents, along with my personal experience and those of our expert guests. The goal in doing this is so you'll have information in hand when you meet a seasoned real estate professional. You're welcome to call us today at 401-766-1240 and ask any question on the subjects we'll be discussing, or you can call me on my personal cell phone after the show at 401-265-6144. And of course, this show is rebroadcast on Saturday mornings at 9 a.m. here on WOON Radio. And of course, it's also on YouTube. If you're looking for any past episode of Real Estate Pro Talk, all you have to do is go to YouTube and type in Real Estate Pro Talk in the search box, and you'll have all of our episodes available to you. So today I'd like to welcome Bert Karabitsis of the Karabitsis Allstate Insurance Agency. Welcome, Bert.
Thank you, Paul. Thank you for having me.
You're welcome. You know, I've been wanting to get an insurance person on the show. You're our first, and
Wow. All right.
because insurance is such a valuable tool when it comes to real estate, and people hate buying insurance, but it's something that obviously we all need. We need that insurance.
Absolutely.
The banks want to make sure that the properties are insured for fire and casualty, with to protect their mortgages and so on and so forth. So I'm glad you agreed to come in today, because insurance is such an important facet in the real estate business, because there's a whole host of things associated with insurance that a lot of our listeners might not know. But before I get into that, what's your company? You own the company. What's the mission of your agency?
Well, I own the Karabitsis Allstate Agency in Greenville, and the mission is simple. When I bought the agency 10 years ago, it was to run a customer-focused agency that provides the very best insurance and financial services products at a professional level, family-friendly. So we work with our clients hands-on.
Oh. Now, do you have, I'm sure you cover the whole spectrum of insurances, right? Anything from home to auto to whatever, correct?
Correct. Full service. The only product that we really don't sell is health insurance. Beyond that, we do property and casualty, commercial, life and health.
I see.
I'm sorry, life, as well as we will also do some financial services products.
I see. So if you had to to tell people in a few sentences why they should buy insurance.
Well, you mentioned earlier we need insurance, and the truth of the matter is insurance helps us manage everyday risk. So from the time you walk out your front door, whether you're driving in a car, taking public transportation, you're putting yourself at risk, or you're at risk of being injured. While you're at home, something could happen to your home during a windstorm, a fire. Your furnace could have a puffback.
Right.
You need to have protection for those types of occurrences. So very important to have insurance. And most people think about insurance in terms of home and auto, but the reality is people should be protecting their lives because they have family members that are dependent upon them.
Sure.
And also you need to protect yourself. If you get injured and you can't work and you can't provide for your family just to cover your expenses, you know, that would be detrimental for most people. So you need to have disability insurance.
Sure.
So lots of reasons,
That's
I guess.
huge.
Yeah,
No, that's
absolutely.
huge because our livelihood is usually our greatest asset.
Correct.
Our ability to bring home a wage and bring home money to live, obviously, and a lot of people don't think of that. That usually our greatest asset is our ability to make a living. So the insurance is for if you don't buy insurance, right? You know, I just had a friend who did that. He didn't purchase insurance for a specific item, and you know he was going to get to it. He was going to get to it, and you want to get to it, and lo and behold, something happened, and you know it's a problem. And now, of course, he's got issues because of that. So,
Right.
you see a lot of that. Do you see a lot of people who you know kind of ride the edge there, and they should be buying it, but they don't buy it, or vice versa?
I do. You know, I think the commercials that we see on TV have commoditized our business. It's all about price. So people just want the lowest price without actually looking at whether or not they have the proper coverage. And I do see people that'll come in periodically with, you know, trying to insure their vehicle, not having had insurance because their registration's up. They need to prove
right.
insurance.
I see.
And then a month or two later, they'll just cancel the policy.
Wow.
Yeah. So there are people who are living on the edge.
Yeah.
But if you're a responsible person, you don't want to live on the edge.
Oh, yeah,
Because if
yeah.
you severely injure somebody or cause a problem, either to yourself or to someone else, I mean, in good conscience, you should have insurance.
Absolutely.
Yeah.
Well, and you know, you just mentioned something that I never really thought of before. You know, if you buy auto insurance, let's say, and all of a sudden you renew it to get the policy number to renew your registration. I'm wondering if the state of Rhode Island has some sort of mechanism to know if it's been canceled or not, or does that person just still ride around with no insurance? You know, is that something that's out there, or have they thought of that? Or
Absolutely. So, in the state of Rhode Island a few years ago, they passed a law. They hired an outside third-party vendor that actually monitors it. So every insurance company has to provide a feed to the registry of motor vehicles on a monthly basis.
I see.
They match the VIN number up with the policy.
okay,
And what happens is if you don't have insurance, this company will send you a letter. It usually takes about 60 to 90 days before you receive the letter, and they give you another 60 days to prove that you have insurance and to provide proof that you bought insurance. If you don't, they'll cancel your registration.
really?
But there's a lag. It's
Okay.
60 to 90 days. Now, our neighboring state in Massachusetts, the registrations and the insurance are linked together. You can't do one without the other.
Oh, really?
It's instantaneous.
Huh.
So in order to register a car, you have to have an insurance stamp on the registration form.
I see.
And as soon as you no insurance agent can cancel a policy unless that person provides proof of another policy or that they cancel the registration.
So it's a self-policing.
Exactly. They do it a little better than we do, but at least we have a mechanism in place.
Right.
But people still skirt that.
Yeah, because when you mentioned that, I'm saying I was thinking to myself, what's to stop someone from just getting a policy and then canceling it, and then just drive down the road and plow into somebody and throw their hands up in the air and say, "Hey, look, I don't have any insurance. You know, chase me."
Well,
You know?
that used to happen. I mean, the statistics were about 18 to 20% of the population were driving around without insurance in Rhode Island
Yeah, so
at any given time.
So,
And
yeah,
that's
it's one
and that's
in
one of the
four,
reasons
yeah.
why our premiums are as high as they are.
Wow.
You know, we have some of the highest premiums in the country.
So on the real estate side of things, Brett, and I wanted you to talk about how it benefits the consumer to purchase other policies while they're bundling insurance later on. But from a real estate perspective, someone buys a house and the mortgage company or the bank wants them to get a homeowner's policy, right?
Correct.
What's the process? What's the typical process that you have to take with that person to get that homeowner's policy for them to be able to prove to the bank or lender that they have insurance?
Sure. So what typically happens is the person buying the home will call you and say that they're buying the home. You'll generate a quote. And how we put together the quote is we basically look at the tax records to get the square footage of the home, some of the details about the property. And then we use a system that most insurance companies use. It's called CoreLogic. And you kind of input all the data about the home into the system. And some of it already pre-populates as well for you. And it determines what the replacement cost of the home is. So you would write the policy for the customer. You agree upon, the coverage.
Right.
And then the mortgage company will send you a request for proof of insurance. Along with that, they want to make sure that they're listed on the policy because they're lending the money to the buyer.
And most of the time, they have a greater interest in the property than the
Correct.
buyer does, right?
Absolutely.
Especially if you're only putting 5 or 10%, 20% down.
Sure.
They have 80% of the risk or 90% of the risk, right?
Correct.
Okay.
Yeah, so we list the mortgage company. We provide something called a binder, which shows when the policy starts. It's typically the closing date. So whenever that person is scheduled to close, that's when we would start the policy.
I see.
So we just usually email them the binder. And for the most part, if somebody is escrowing, the first year's premium is paid at closing by the mortgage company, but in some cases, the lender may request that the person prepays a year's worth of insurance, in which case we would collect the premium and we would stamp the binder paid in full.
Okay. So they walk into the closing with this, or they present it to whoever the closing agent is, and that's usually sufficient
For the most part,
close?
usually mortgage companies want to have all the paperwork in place a couple of weeks prior to closing.
Oh, okay. All right.
So we provide that information to them ahead of time.
I see.
The customer doesn't really walk in with anything because that's already been sent over to the
Okay.
lender.
I see. Yeah, that makes sense, just in case it doesn't happen the day of
Correct.
the closing, that would hold up the works. Now, is there any special differences between someone buying a single family or a multifamily house in as far as the acquiring insurance goes? Is there any particular
Well,
format?
the difference is if you're buying a 1 to 3 family home, and you're going to live in the home, so it's going to still be your primary residence. It's treated the same way.
I see.
There is no difference. Once you reach 4 family, then you start looking at whether or not an insurance company will even take it on a standard homeowner's policy. For the most part, when you start looking at 4 and 5 families, that becomes a commercial risk,
Okay.
and it's written on a different type of policy.
So that's like an investor would.
Correct.
Would okay.
Correct.
All right.
And even if you do decide to live there, you still have to buy a different type of policy altogether.
I see. Well, what's the typical? You do this every day. You write hundreds of, if not thousands, of policies a year. Usually you'll get something in the mail from a lender that'll say, you need insurance, and we recommend you get XYZ coverage for this and XYZ coverage for that. Like liability, someone in your house visiting, falls down the stairs, just to say, is there a particular dollar figure of insurance that you think that someone should get? Like, I know in my building, my commercial building, I have to have $1 million worth of liability insurance, and I actually have to present it to the town to show that I have this document that says in case someone falls and
Sure.
they stumble down my front stairs, I'm protected up to $1 million. Is it similar with like a single family or a multi-family purchase?
Well, I would treat them differently in that a single family home has less risk the homeowner has less risk
Okay.
than a multifamily home when you have tenants, guests of tenants coming, especially if you have a 3-family.
Right.
So typically on a single family home, I recommend, assuming there's no swimming pool or no swing set, I recommend at least 300,000.
Okay.
And if somebody has a swimming pool and, a swing set where you have a lot of neighborhood kids coming over playing, where
Right.
it becomes a risk, $500,000.
Wow.
Now, for a multifamily home, I would say $500,000 to start with. And depending upon, the individual, what type of assets they have, whether or not they're living in the home or not, we may need to consider an umbrella policy for them.
I see. Well, you mentioned a swimming pool, and I think that's, I got to tell a story because, you like your business is like my business. If you're in our business for over a year, you have a million stories to tell at a party on a Saturday night.
Absolutely.
I had a situation years ago where it was a foreclosed house, and I purchased it at auction in the street. I signed a sales agreement,
Okay.
and the house had a pool in the backyard. And I got a call from the police department the next day. This was like a Friday auction, and on Saturday, I got a call from the police department. Now I haven't closed yet. I'm still waiting. The closing was 30 days away, and the police said, "Well, you better get down here. We got problems." They wouldn't tell me what the problem was over the phone. So I drive to the house, and of course, as I turn the corner to the street, I see the gumballs of the police lights flashing and an ambulance flashing and the fire. And I said, "Oh my God, this is not going to be good." So I get up to the house. Well, come to find out, the previous owner had gone to the house and started to take the swimming pool apart because he figured that was his pool, but he didn't take the water out of it first. So as he was unscrewing the top of the pool, the whole thing just let go. And unfortunately, this house was on a street with a hill. The house was higher than the neighbor next door. So I did the math: pi r squared times whatever, and I guess we estimated there was like 14,000 gallons of water in this pool that slammed into the neighbor's house next door. And come to find out, that guy didn't have a pool coverage. Unfortunately, it was a pretty nasty legal battle because now I was drawn into it by virtue of having an equitable interest in the property by signing the sales agreement. So I had to go hire a lawyer. Fortunately, the bank had some sort of overarching policy that protected
Right.
them, and they were the primary, but I was the secondary. But it still cost me a couple of $1,000s in legal just for a pool. And I know I'm going to Beijing to get to Florida, but the pool issue, do you see people actually not insuring their pool? I mean, did they just tell you we have a pool, or do they have to get a rider for the pool or some sort of special?
Oh, there's no rider for a pool. Typically, when we write the policy, we interview the client and find out all the details about their homes.
Okay.
And most of the time they'll tell you that there's a pool,
Okay.
whether it's an in-ground pool or an above-ground pool. And that's covered by the homeowner's policy, actually. You don't need a special rider. The only thing that does come up periodically is if somebody has a slide or a diving board. Some companies will not accept that type of risk because it's a higher risk of somebody getting injured. But beyond that, the actual physical pool or the cover or the cabana building, that's all
Right.
part of the, that's all covered
That's
by
all
the
wrapped up
policy.
in the policy.
Correct. You don't need
Okay.
anything extra beyond the homeowner's policy.
I see. So it's almost looked at like a wood stove, if you had a wood
Correct.
stove in your house, or some other extra
Correct.
additional item that might be a risk for the insurance company. May pay a little bit more, right, for that.
Absolutely.
To cover that risk.
Something they're also sticklers on is they want to have a locked gate. You have to have a fence around your pool in some manner, whether it's an actual fence or if you have an above ground pool,
Yeah.
you have a ladder that lifts up so
see.
no kid could fall into the pool.
Makes sense.
Yeah.
Makes perfect sense. Now, does someone have to, from the insurance company or yourself, do you have to go and look at the property to inspect it yourself, or do you basically just, did they just write these policies and they only I don't know, inspect the property if there's a problem? How does that usually go?
Most companies will send an inspector out to do a liability inspection.
Okay.
What they look for is liability risks. They want to make sure that the home has pride in ownership, as I like to say,
Yeah.
and they want to make sure there aren't any issues with the home which could lead to a claim.
I see.
So a lot of times they'll start off now with technology. A lot of times they'll just look at it online and get a general idea of what the house looks like from the listing or from the tax records. And if they see something questionable, they'll actually send someone out and have them walk around the property. So we end up seeing a lot of different things with people's
sure.
homes.
Yeah.
Yeah. So the big one for most insurance companies is the roof. If there are curling shingles, lifting shingles, the roof is really worn,
I see.
that becomes a big risk. A lot of companies will tell you to replace the roof, repair it, or they're not going to continue to insure you. That's a big one. And then the other thing that we see a lot of, believe it or not, is debris. People, you'll drive by somebody's home, it looks like a junkyard.
Right.
somebody can get hurt.
Absolutely.
So,
They have a 63 Nova in the backyard that's
Exactly.
been there since 1969.
Yeah, and parts all over the place.
Yeah, right,
Yeah.
right, and that's definitely a hazard. I've run into that in the real estate business. You're walking around talking to someone and you're not watching where you're walking, and all of a sudden, bang, you're on the ground because something was there.
Right.
Now, the homeowners, so the roof and the fencing around a pool. But what about if somebody has like a dog? Do you have to tell the insurance company that you have a dog?
Absolutely. Most companies, and when I say most companies, every company has different guidelines. So there isn't one guideline that's hard and fast for every company.
Yep.
So for the most part, they just want to know what breed it is
Okay.
and whether or not there's bite history.
Okay.
If the dog has bitten someone, then that becomes an issue, and some companies won't write you. The breed of dog is important. Some companies have a list of dogs that they will not write.
Really?
Like a pit bull,
Right,
for
right.
example.
No, perfect. Yeah, makes sense.
An Akita. There's a bunch of like wolf-related type dogs that will be excluded. So,
Really?
Yeah.
So is that a question on the application? Do you have a dog? Do you?
Oh, yeah,
What type
absolutely.
of dog is it? And do they have a bite history? Wow.
Absolutely.
Really?
And if there is a bite history, they may actually exclude any claims that come in because of the dog. So they'll write you the policy, but they'll exclude
Okay.
anything with the dog.
So you can still get the insurance
Correct.
for the closing, but if anything happens pursuant to the dog, you're on your own, basically.
Correct.
Okay, that's interesting.
Yeah.
So when they come to you and now it's the time for closing, that you get the documents over, they close. I'm sure you must try to meet other needs, other insurance needs that these folks
Sure,
have, right?
absolutely.
You kind of try to mix and match things to save them a couple of bucks, right?
Absolutely. You do save money by bundling. When I'm talking with the prospect or the client about their new home purchase, we always quote the auto if we don't have the auto, because that saves them 35% on their homeowners. And they also save 10% on the auto for bundling those two.
35%.
Yes.
That's a lot of money.
It is a lot of money. Absolutely. Makes a difference.
Oh.
It really does. So, of course, we try and capture that business as well.
Wow, like my dad used to say, nickels and dimes make quarters. Any way you can. I find I'm using my father's old lines as they get older and older.
We all do.
The ones that I used to roll my eyes at 40 years ago. But
Yeah, we all do.
so that bundling. Wow, this is great stuff. But look, we're going to take our first commercial break, Brett. Let's we got a bunch of stuff to talk about regarding homeowners insurance and different policies and different riders. So let's take our first commercial break, and we'll be right back.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
And welcome back to Real Estate Pro Talk. We're still here with Bert Karabitsis of the Karabitsis Allstate Insurance Agency. Our first real estate tip of the week. Of course, every week we talk about these real estate tips, and it's still the heating season. We're not out of the woods yet. It's not April yet, so the furnaces and the boilers are still on. If you have oil heat, you really should have your oil service person come in once a year and clean the boiler. Of course, it's tough doing it now, asking them to do it now if you're in the middle of a heating season because they're probably booked solid. But an oil-fired furnace really works much, much more efficiently if the system has been cleaned out. The gas furnaces, they still need to be cleaned, although not as often as an oil furnace. However, I would say on average, a gas furnace would probably need to be cleaned every 3 to 4 years. But the oil furnaces, oil hot water tanks, oil-fired hot water tanks should be cleaned at least every year. And that will increase your efficiency on top of it. If you're starting to get that gas smell or oil smell in your house, that usually is a sign that the system needs to be cleaned. So we're back with Bert, and Bert, let's talk about special coverages. Let's talk about the things that everyone figures out that they needed after the disaster.
Sure.
We talked a little bit about homeowners policies. To your knowledge, are there any things that you would recommend that a regular homeowner, additional insurance that a regular homeowner would purchase separate and apart from their regular standard policy, on the surface, other than the things we kind of talked about, wood stoves, pools, and dogs? Is there any common thing that people are buying separate and apart from the regular policy?
Well, there are some coverages that you should consider adding, depending on the type of home you're buying. So, for example, if you are buying a single-family home, all homeowners policies come with base coverage for jewelry.
Okay.
A lot of them will give you anywhere from $2,500 to $5,000 worth of coverage in jewelry, but they will only cover you up to maybe $1,000 per item. So in total, $5,000, but one item they won't pay more than $1,000 on it. Well, most people have an engagement ring, let's say, or a fancy watch. That's something you would want to add to the policy separately. We schedule that to the homeowner's policy and insure it separately based on the appraised value. Because if something were ever to happen to that fancy ring or watch, if you lose it, it's stolen, it's damaged,
I see.
you would, if you just had base coverage, you would lose a lot of money.
I see.
They wouldn't cover, $1,000 if you have a $20,000 engagement ring, for example.
$5,000 sounds like a lot of coverage, but in this day and age,
it really isn't. So that's one thing. The other coverage that I would recommend for multifamily homes is something called water backup coverage, specifically because that covers you in the event that the sewer line going to the street gets blocked.
Okay.
When you have a tenement, a lot of times you have tenants putting things down, flushing things down toilets. They don't really care what's going down the drain because they don't own the property, right? So if there's ever a blockage and the hazardous waste backs up into your basement, that'll cover you for the cleanup. That the base coverage for that would be $5,000 worth of coverage for the cleanup, and you can buy higher amounts.
Right.
But if you have hazardous waste in your basement, you can't clean it up with a shop vac. You actually need to have professionals come in, and that becomes a costly endeavor.
The environmental guys have to come in with the white suits and the masks and all that stuff.
Exactly. So that would be something I would definitely suggest.
Really? That's great information because I've never heard that before. I've never, in 40 years doing this, I've never heard an insurance person recommend that to any of my clients. And that is so important because I had a situation where there was a storm this is years ago. We bought a house to fix it and flip it. And I guess there was a storm that was a couple of weeks prior, and this was a vacant house, and the sewer line did not have a backflow preventer. And when we opened that basement door, surprise, surprise, there was about a foot of sewerage from the towns backing up the line, and that was a pretty ugly, nasty situation. It took about a month to clean up between all the people and the inspections, and the building inspector's got to come over, and the environmental people have to be certified. They have to show their license. I mean, it was a big deal. What about people, Bert, that have home-based businesses? We're seeing a lot of people now that work out of their house.
Yeah, sure.
Is there any different classification of insurance that they have to get, or you'd recommend that they get?
Absolutely. So there are a lot of people who, for example, do shows like jewelry shows or like the Pampered Chef shows, where they have inventory in their home. They have stock. Well, that has to be insured. And many places, if you decided to, let's say, go to the convention center on the weekend, if they were having some type of home show or something and you wanted to actually display what you're selling, they're going to mandate liability insurance.
Sure, makes
so
sense.
you have to have a general liability policy.
Yeah.
So as a small business owner, even though you're home-based, you should have a general liability policy. And along with that, there are extra coverages you can buy for, let's say you have samples or stock
Right.
at home that would protect that, because a standard homeowner's policy will not cover any
Really?
of that.
Wow.
No, not at all.
What about the person who has just like an office in their house? Is there any and they may occasionally have people coming and going who are utilizing their services, almost like a business insurance. Is there anything that you can think of off the top of your head for that
If
person?
your business is based in the home and that's your business address, you need to have a general liability policy.
Oh, okay.
Yeah.
Okay.
Yeah.
I was wondering about that because, a lot of people work out of their homes now as compared to years ago, and they have these little offices, and I have one in my house.
Sure.
I spend probably 4 hours a day in this little cubby hole that carved out of the basement with all of my equipment down there. But I don't have anyone that comes to my house per se. I'm always out on the road. And I just didn't know if there was some special insurance for that. So rental properties, you had mentioned, that the sewage insurance or rider, I guess you'd call it. But
Correct.
Is there anything special for landlords that they should buy that you would recommend?
Well, a couple of things. So if you own a multifamily home, whether you're living in the home or you're just an investor, you definitely want to have a rider to protect the income. So let's say there was a catastrophic loss and you weren't able to collect rent. If there was a fire in one of the units, your tenants move out, you still have a note, you still have an obligation.
Correct.
So you can actually get lost income rider for that type of home.
Really?
So that would be something I always include in my multifamily home when I insure a multifamily home.
I see.
Because if something like that happens, a lot of times, especially first-time home buyers that are buying in a city like Woonsocket or Pawtucket, they really are relying on that extra rental income to cover the mortgage. That's how they qualify.
Absolutely.
And if they didn't have that income coming in for a period of time, whether it's a couple of months, or it could be, a year, depending on the claim, they would lose their home.
Wow. So this insurance covers the lost rent, that the revenue from the rent that the homeowner would have received, or the property owner would have received, and is that solely in the event of a fire, or is there
any named peril that's covered under
Okay.
the policy?
I see.
So if somebody is displaced, so if their tenants are displaced for whatever reason,
Yep.
they can't live there. Could be a fire, water. Could be because of let's say the wind knocked a tree into
Right.
the
In the roof
into
or
the
something.
roof,
Right.
and it's exposed. So for any type of covered loss, the landlord or the owner of the home only needs to provide a copy of their lease, and they would get fair market rent.
Right. Now, and we didn't discuss this in advance, and I don't know if you know this or not. So if you don't, it's no problem. But what if there's a catastrophe, and of course your tenant no longer has the ability to live in your rental, and you have to kind of put them up somewhere. You have to. Does that cover you? Putting them. And I know I'm getting gray here, but I've heard of situations where tenants, the landlord was responsible for the tenants, especially if they have a lease per se, and the landlord had to basically make sure that these folks had a place to stay. I know in the event of a fire, usually the Red Cross is there and so on and so forth, and
So-
it takes them to a shelter or whatever. But I'm just curious again.
It's a good question, Paul. So here's what I would recommend. First and foremost, if you're a landlord, you mandate that your tenants buy renter's insurance.
Ah, okay.
Okay, it's if there's any type of damage or something that displaces the tenant, it's not up to the landlord to provide, accommodations.
Right.
Okay, unless it's something that they themselves caused.
I see.
But if it's like a peril, an act of God, an act of nature, whatever you want to call it, the tenant should have renter's insurance,
Right.
and that way the renter's insurance will cover them if they are displaced. It'll pay for a hotel.
Right.
And the other reason why you should mandate renter's insurance is because renter's policies come with a liability coverage.
I see.
And if, let's say, the renter has a party and somebody causes some damage to your property or falls down, gets hurt,
Yep.
there's a layer of protection there. That person could go after the person who was hosting the party, the tenant's insurance policy, rather than you getting stuck with that claim.
Yeah, that makes sense. No, that makes. And of course, if there was ever a fire or something, that would cover their belongings, right? Their furnishings, the renter's insurance. I would think
The
covers-
renter's insurance, yes, it's
Yeah.
absolutely
You know,
correct,
if
because the landlord's not responsible
Correct.
for the tenant's personal belongings.
Yeah. Yeah, a lot of these little things. Like we had John Barr from Bedbugs, Rhode Island, on here a few weeks ago, and he's told me something I didn't know that, and it has nothing to do with insurance, but that if someone brings a bedbug problem into a rental property, it's up to them to pay to get rid of it. So I guess it's something similar. If you have a liability from the tenant caused the initiated whatever the liability is, at least the landlord has a fallback position.
Absolutely, it's very important.
How about condos? Lots of condos now, I think, are more popular than I've ever seen. I notice now young people, they don't want, I shouldn't say that. A lot of young people don't want what I wanted when I was 27, 28, 29. What I wanted when I was 27, 28, 29 was a house just like my parents had, and we have the backyard and the barbecues and all the, the stuff. I find the younger people now just want a place to go home at night. They'll pay the condo fee. They don't want to mow a lawn. They don't want to shovel a walkway. So there's different types of insurances for condominiums, correct?
Absolutely. If you're buying a unit or you're buying a condo unit in a building, the first thing I ask the person buying the unit to bring me is a copy of the master policy.
Okay.
Because I want to see exactly what the language is, what is being covered. There are some associations that have had policies out for years, and the insurance or their insurance will actually cover inside of the unit as well, not just the common areas.
Oh, really? Okay.
Yeah, a lot of times you'll find them covering everything except for betterments.
Mm-hmm.
So if you have a unit that hasn't been upgraded, they'll actually have coverage. A lot of the newer associations, it's basically you're responsible for studs in
Okay.
for coverage. So you would need to buy your own condo policy.
I see.
And based on the size of the unit, the finishes, we determine what the property protection should be for that policy,
I'll say.
for the customer. And then, of course, there's also coverage for the personal belongings.
Yep.
But one of the most important coverages that you should buy as an add-on to your condo policy is the loss assessments coverage.
What's that?
What that basically is, all condo associations have a master policy. Okay, if there is a loss,
And the master policy, not to interrupt you, the master policy is the association's insurance policy
for the common areas,
that covers
the exterior liability for the
parking
common
lots and
areas,
things like that. Okay.
Absolutely.
All right.
If there's a loss on that property, a lot of times associations, because of the cost of insurance, will have high deductibles. So what'll happen is, if they have to file a claim, they're gonna pass along that deductible to the owners. So let's say you have a 10-unit complex and you have a $10,000 deductible. They're gonna take that, and every one of the unit owners is gonna have a $1,000 bill
Right.
for that.
Have to share it.
They
right.
have to share it. So loss assessments coverage will actually cover you for that.
Really?
You would just file a claim with your insurance company, and they would actually pick up that cost.
Really? Wow.
Yes.
I had never heard of that before. That's
yeah.
great. Because, obviously condominium living is very different from a regular. So that policy that person you said that mentioned studs in, that means everything from the studs in the condo unit in the unit,
Correct.
you're still responsible for.
Well, that's
buying
your
a policy.
unit.
That's your unit. So it's almost like another homeowner's policy, right? Similar?
Well, it is correct.
Okay.
Absolutely. And if you're taking out a mortgage, the lender is going to want to make sure that you have coverage to cover the inside of the unit.
Okay. Now, does that cover everything that typical homeowners would cover, like theft and liability and someone slipping and falling in your dwelling and so on and so
All
forth?
those coverages are
So
there.
they're all
They're part.
covered.
Yeah, it's exactly like a homeowner's policy, other
see.
than you're not insuring the exterior
Okay.
of the structure.
So I would think because of that, then the premium must be less than if you were buying if you had a $200,000 condo or a $200,000 house, because you're not really insuring the roof and the parking lot and all that all the good stuff. It must be a little bit less money, right?
In my experience, it's about a third less.
Wow. Okay. So that's
Yeah.
substantial.
Yeah, I've seen condo policies that are $300-400 a year.
Wow, that's substantial, because now that third, the way I sell real estate is, hey, you take that third and you apply it towards the condo fee, and that's one way to chew up mentally just the the difference in what you wouldn't be paying if you had a house as compared to a condo. How about vacant houses, Brett? I know a lot of folks. I've had clients do it. People move out, and the place is vacant for 1, 2, 3, 4 months, and something happens, and then all of a sudden the insurance company says, "Hey, this place was empty. We're not covering it." Is that true? I mean,
That is true. So an insurance company, they hate vacant properties. They don't want to insure them. There are specialty carriers that will insure a vacant home. And typically when you buy a vacant home policy, you're buying it in increments, 30, 60, 90, 120 days.
I see.
And it's a very expensive policy. Now, your standard homeowner's policy will cover you. For example, if the home is furnished, and let's say you go away for, on vacation for 30 days or so,
I see.
that's not considered vacant. Vacant means
Okay.
empty.
Empty. Okay.
Right, where nobody is in the home, there's nobody going in checking on the home. It's absolutely vacant.
Right.
Insurance companies don't want to insure those types of risks. So if they do randomly inspect and see that the home was vacant, they'll drop the coverage.
And that makes sense, because if it's empty, shenanigans can happen in that property.
Well, right. So with that said, one of the big risks around here, especially with the weather,
Yeah.
is if no one has the heat on,
Mm-hmm.
or you're not keeping your heat at a certain level, pipes will freeze.
Right.
Pipes burst, they cause a claim.
Right, there you
You
go.
know?
Yeah.
Simple as that.
Well, yeah, and I know a lot of folks try to get away with it. They, excuse me, they move out and they keep the house vacant for a while it's on the market. And I'll ask them, hey, do you have any kind of special insurance? And I'll let them know, and they kind of give me a wink and a nod. And I say, boy, that's risky.
It is
really,
risky.
some kid can get in, whatever, anything can happen. And you'll be the last one to find out about it. How about flood insurance, Bert? That's a big thing now after the Hurricane
is.
Katrina. Everyone started going crazy over flood insurance. How does that work? How does flood insurance work?
Well, for years, the only entity that would sell flood insurance was FEMA.
Mm-hmm.
And all of the insurance agents, many of them acted as agents for FEMA, and FEMA set the guidelines. Typically, it's $250,000 or less. They won't insure you for anything more.
I see.
And depending on where you are on the flood map, because FEMA creates maps based on risk levels of being flooded, determines what you're going to be paying. So if you're on the water, you're paying a lot more than if you're in the middle of, northern Rhode Island, let's say. So now people are starting to look at flood insurance more. Some new companies have come out with private flood insurance, which are a little bit less than FEMA. We could do a whole show on flood insurance.
Oh, I'm sure. It's very complicated.
It's very complicated. Whether you have an elevation certificate or not determines price. I mean, what the elevation is and so forth.
And it could be a river 5 blocks from your house.
Absolutely, yeah.
And because of the lay of the land, the bank comes back and says, hey.
And they mandate it.
Yeah. So you're seeing a lot of do you see more flood policies being issued now than years ago before all the
banks
craziness?
are requiring it.
Okay.
It's only because the banks are mandating it.
I see.
If it weren't for the bank mandating it, I don't think consumers would buy it
Everyone
as much.
would just roll the dice just in case. Wow.
Absolutely.
Wow. Well, that's great information. We have 11 minutes to go, so we're going to take one more commercial break, and we'll be right back with Bert Karabitsis.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Welcome back to Real Estate Pro Talk, and we're still here with Bert Karabitsis of the Karabitsis Allstate Insurance Agency. Our second real estate tip of the week. I hate to sound redundant, but things, need cleaning in your house. The refrigerator, the back of that refrigerator with that condensing coil really should be cleaned out for a whole bunch of reasons, not only for safety reasons, but the efficiency of the refrigerator. The big box stores and hardware stores sell those little snake brushes that you can get in there, and they're cheap. I mean, they're like $3 or $4 for these little brushes. You should really pull that refrigerator out once a year anyway, and get all those dust bunnies out of there, because you'll see a noticeable difference in your electric bill for the refrigerator. Refrigerators really use up a lot of electricity. You got to remember, when you go to bed at night, that refrigerator door stays closed for 8 hours, so that device is running for 8 hours, and you're really not getting any use out of that refrigerator other than cold half and half the following morning for your morning coffee. So, Brett, this has been really great information. Any we only have about 8 minutes left. Any story you could tell me that you think would make our listeners keep them entertained when it comes to insurance. I mean, because I find that, like Forrest Gump, you got to tell the story for things to be understood. Anything come to mind? Or?
Well, one story that comes to mind that I use pretty regularly because it's a real story and it happened. A couple of years ago, one of my clients, a young professor, he teaches at one of our local universities here. He was leaving work. It was a rainy night, and he approached an intersection. He stopped. He wanted to make a right-hand turn. He looked to his left. No one was coming. So he proceeded to make the turn, but he didn't see a pedestrian trying to cross.
Oh, boy. At night.
At night.
Right.
Correct. Rainy night. It was in the winter, It was in January.
Could happen to any of us.
Exactly. So unfortunately, he hit the pedestrian, severely injured the pedestrian, and the person had about $200,000 worth of medical bills.
Wow.
A lot of bills. The fortunate thing is that about a year prior to this incident happening, I sat down with him and we holistically looked at all of his policies, looked at his coverage limits. We talked about his financial assets, what he had, and we determined that he needed an umbrella policy. So we sold him $1 million umbrella policy.
Wow.
So fortunately, he had the coverage to
Nice.
take care of this individual.
Yeah.
Now, I use this story because it really did happen, and the reality of it is, if you don't have enough coverage and you do injure someone,
Yeah.
that person will end up suing you eventually.
You get wiped out.
You'll get wiped out. If
Yeah.
you have any liquid assets, they'll be gone, and they may even attach and garnish some of your wages to
Right.
cover, depending on the severity of the claim. So what I like to tell people is, most people in Rhode Island who don't own homes are driving around with the state minimum.
Yeah.
They're concerned about price.
Right.
And unfortunately, it's not always about getting the lowest price,
No.
but it's about having the right coverage. And if you're someone who's a professional who makes a comfortable living, you really should consider higher liability limits because you could lose everything.
That story really hits home because I think of a situation. I know of a person that got involved in a similar situation a few years ago. It wasn't hitting a pedestrian; it was a car accident, and they were accidentally at fault. And their insurance didn't cut it. They went through some bargain basement, just to get over the line, just to get the car registered insurance, and they had money saved for their kids' education. And the judge, they went in front of the judge, and the judge said, "Hey, look, I'm sorry that you had the money saved for your kids' education, but you know what? That's your money. Your kid's education just went to this other party, so it could be financially devastating." How does one put in a claim? So, assuming something like that happens, what's the process? We have about 4 minutes left, but what does one have to do to put in a claim?
Well, if they're working with an agent, they typically will call the office, give us the details, and we'll file the claim for them. We'll follow up for them.
So it's over the phone.
It's over the phone.
Okay.
Yeah, I mean, a lot of companies will allow you to actually log right in on the computer and put in a claim as well. Depends on the severity of the claim. If you're involved in an accident, the first thing I tell people is they should call the police. I don't care how small it is, how big it is, you need to call the police.
Great advice.
Yeah, because the police, it's a third party, they'll fill out a report, and a lot of times insurance companies will look at the police report, look at the damage of the vehicle, and then they'll talk to both parties. They'll take statements to determine who's at fault.
Right.
And the police report weighs heavily on who's at fault, when it's determined. So call the police, take pictures. I mean, obviously, if you're injured, you go for medical care when the rescue comes. But if it's a minor incident, you still call the police, take pictures, and then within 24, 48 hours, call your insurance company and file a claim.
That's a good point, because everyone now has, most everyone, I shouldn't say everyone, but most everyone has a camera in their phone.
Absolutely.
And you could just, take that thing out and start taking pictures of the scene, take pictures of the weather conditions or whatever was prevalent, right, at that moment.
Absolutely.
That's really an advantage, especially if you think you're in the right,
Correct.
Problem is, when I think I'm in the right, I'm usually in the wrong. But in any event, well, you know what? While we still have the chance, I got another couple of questions for you, but while we still have the chance, Britt, why don't you give our audience your contact information, and because I'm sure there are some people out there that would like to contact you after hearing some of the advice that you've given today. And of course, as I mentioned before, if you missed this show or you've missed a facet of the show, it's going to be rebroadcast tomorrow morning at 9 a.m. on 1240 a.m. 99.5 FM. So you can listen to the show again, and then one more time you'll be on YouTube. You'll be a YouTube star by Saturday night, Brett. I don't know if you knew that. And people can listen, and so your contact information will be there as well. But why don't you give it to our audience right now, and we'll move on.
Sure. My office is located in Greenville at 559 Putnam Pike. And Greenville's part of Smithfield. My telephone number is 401-949-5090, and we're open 8:30 to 5 Monday through Friday.
Wonderful. That's great. I wanted to get that in because sometimes I run the clock right to the end, and the show is supposed to be all about you, not about me. Well, we got about a minute and a half left. Britt, I had a couple of other just brief questions jotted down. Should a person file a claim with someone else's insurance company, or should they go through their insurer? Let's say you get hit, right? And that person has insurance. Is it advisable to go through your own insurance or go directly through their insurance? Is there any difference in that?
Well, it depends on the type of coverage you have. If you just have liability insurance on your car and somebody hits you and it's their fault, you definitely need to go through the other party's insurance because you don't have coverage.
Correct.
So in that situation, you definitely want to go through the other parties. But if you have what I like to put in quotes, full coverage on your vehicle, you certainly can file a claim with your carrier. And if it's not your fault, there's no deductible involved, and no fault accidents don't count against you. Okay. So there's no negative ramification for doing so.
Penalty. I've always wondered about that because that's that these things happen. But in any event, 10 seconds to go. Britt, thank you for coming in today. It was a pleasure. And we will talk to you next week on Real Estate Pro Talk on 99.5.
Thank you for having me.
You're welcome.